Hi, everyone. This is Jason Burack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's been making finance YouTube videos about investing in the economy for many years. He's also a former Wall Street floor trader for many years. Greg Mannarino, thank you for joining me again.
Well, thanks for having me. I'm happy to be here with you.
So, Greg, we're recording this interview on Wednesday, May 24th, 2023. More nonsense with the debt ceiling. Seems like it's kabuki theater. Both political parties are trying to stab each other in the back in public, blaming everyone else. But really, it seems that neither political party wants to cut spending. What type of damage do you think these Fed interest rate hikes are doing, though?
I'm glad you brought that up. What to me, I've been talking about this since day one. I've pretty much outlined for people, and this is my perspective, and of course, people entitled to their own. But look, they've been at this for quite a long time. We haven't seen any real relief at all for people. Has not, to me, it was never meant to actually stop or reverse inflation here. This is just a way that they can lessen the availability of credit to small businesses, which are failing at a staggering pace, and to crush the consumer, crush the economy, crush the consumer, moving towards their new system. And I've outlined this since day one. I explained to people that this central bank cycle of raising rates here would wreak havoc on the economy, as it has done. We watch what's going on here with the regional banks here, and this is, in my opinion, going to get worse, going to bleed off. I think the big banks are in a lot of trouble. From at least 9 months ago, I started explaining to people that the banks are in trouble because why? Three things: no deposits, no loans, and no deals. So there's a lot underlying this, as you are well aware of, and we'll talk more about this during this little talk we're having here. But everything is, in my view, everything that the Fed is doing is working to their favor. And it's insane. Over the past week alone, they've run 2 surveys to see how the consumer and small businesses are doing in this environment. And to my shock, how about no, it's doing exactly what it's supposed to do. That is, hurt the consumer, crush the small businesses here. And in my opinion, this is just the beginning. I believe sincerely in my heart of hearts, this is going to get worse. They're not going to stop. This has been something that's been in the works for a very, very long time. All we're doing is living in the side effect of what central banks have planned a long time ago. And, what is their goal? To be the lenders and buyers of a last resort. I've explained this since day one. They are hell-bent on what have they been doing? Creating distortions that are beyond anyone's wildest dreams, I think, across the spectrum of asset classes here. And so everything is, it's going exactly how they want it to go. And it's going to get a lot worse for people, unfortunately, moving forward.
I just want to add to your points there about distortions in the stock market. I just saw a chart about distortions in the U.S. housing market, about what home prices are, the increase in home prices over the last 3-4 decades with artificially cheap interest rates and the Fed subsidizing 30-year mortgage versus the rent. The charts just, one of the charts is going parabolic for home prices over the last 30 or 40 years. And that's because the Fed is subsidizing 30-year mortgages along with the U.S. government. Also with stocks, Greg, I just saw a chart out that, in case you missed it, the combined market cap of Alphabet or Google, Amazon, Apple, Meta, Microsoft, and Tesla is up to $2.4 trillion since the start of this year. That is 1.5 times the total market cap of the German DAX index. So it's just really a handful of US stocks plus Nvidia. The market cap for Apple now is larger than, I think, the entire market cap of the United Kingdom or London Stock Exchange.
Yeah, it's pretty extreme. It's pretty unbelievable here. There's another phenomenon going on here that more people right now are owning stocks than they have in a long time. And that's usually a bad sign. What we heard from JP Morgan today, they're telling, you probably saw this too. They're telling their clients to lighten up on exposure to the stock market, while at the same time telling people to gain exposure to gold and crude oil. This is what they're telling their own clients. Now, this is kind of interesting. I think energy, especially after we just heard out of OPEC, they're warning, quote unquote, of much higher energy prices moving forward. I mean, duh. I think you got to be, I'm not you got to be nuts to not realize that this is how it's going to play out here. And with regard to exposure to long end in the market, I can't say like I'm net long this market. I've been net long this market for a long time. But there's going to be a moment of reckoning. There's no doubt about it. And, with regard to the debt ceiling, and we'll talk more about that if you like, how this is going to play out. I mean, what do we find out today from the Federal Reserve, how they're willing to add liquidity to the market in the event that there's a debt default here? What are they trying to say? They're gonna buy it all. They're gonna prop it up. That's what they're gonna. We have no resemblance of a free market anymore. No free market economy. The whole system is twisted, and it's going to get more twisted, in my opinion, moving forward. It's crazy.
Well, it's nuts. If, like you said, if they keep adding liquidity programs while they're raising interest rates, I mean, they have to pay out. The Fed is deeply cash flow negative. If the Fed had to adhere to generally accepted accounting principles and mark-to-market accounting, the Fed would be insolvent. The Fed would have enormous mark-to-market losses on all the. Well, look at the interest payments. When the Fed raises interest rates, the average person is not thinking about that $2 trillion plus that the large banks have parked at reverse repo. The Fed's paying out high interest rates on that cash parked there, and then all the cash from the quantitative easing programs the last 15 years at interest on excess reserves. So the Fed's just paying out enormous amounts of interest payments on all that cash there. The Fed's deeply cash flow negative now.
Oh yeah, and I think the whole system is what people need to know, and they know this already if they follow my work, is the whole system operates in a perpetual deficit or a perpetual vacuum. That's how it works. That's at its core. And unfortunately, we're getting closer and closer, in my opinion, to that moment of reckoning. When I don't know. But it's going to be interesting to see. I mean, everything that I think you and I have went over from a very long time ago, it's all playing out. People can look back on our work and say, you know what, these guys got it right. And we're not always right, of course, but for the most part, in aggregate, for the big picture, I think we've nailed it for quite a long time. It's just so obvious, I think, to people like you and I and people that follow our work, because some people just have the ability to maybe think a little more than the next guy. And I really believe that's true. Some people just have the ability. Maybe it is that people have developed this sense that, they don't want to pay attention to the things that maybe scare them a little bit. Me, I don't get scared at nothing. I'd say, okay, this is what's going on. What do I need to do about it? To at least try to get myself on the right side of it and keep myself. And a big part of this is obviously, it's trying to stay ahead of the curve, understand what's going on, looking at the bigger picture. And just kind of, I laugh a lot. If you notice in my videos, I laugh. I can't stop laughing sometimes. I just can't believe what we're seeing here. It's la la land on an incredible scale.
It's a Twilight Zone.
It's a Twilight Zone. It really is. It's a Twilight Zone, or it's a comedy show, or it's a freak show, something along those lines. But, again, like I said, you and I, we've done our job, man. We've been keeping people ahead of the curve for years. So I'm happy to say that we've both done that.
Well, we've been warning people about the Cantillon effect. I mean, even regardless of Fed policy, the asset prices have been divorced from reality. So you'll look at the general U.S. stock market indexes, they're divorced from other stock market indexes now, but they're definitely divorced from the real economy. You look at home prices, the bond market, the Fed was artificially capping interest rates. So you had all these bond traders, when the Fed was lowering interest rates or capping them, they would put on these leveraged bond trades. But of course, which is part of risk parity. But of course, once the Fed started raising interest rates, we saw this with the 2019 rate hiking cycle. When that ended, Jerome Powell is also Fed chairman, with repo madness. Every time the Fed hikes rates, really since 2008, it just causes another boom and bust cycle. And then the Fed has to come in there and paper things over with more bailouts and rules changes.
Absolutely, 100%. I think people who have been holding long-term debt, they're in a lot of trouble. They're in a lot of trouble right here, and the banks got to be flush with this stuff. I mean, there's all this underlying stuff going on that people aren't being told about and don't know about. The entire system is insolvent. The entire system operates in a vacuum, and unfortunately, we're all going to pay the price for it. I mean, it's just the way it is. It runs these boom and bust cycles, absolutely. But this time, I think we're leading up to something a lot bigger here. They want to, and because the system is now so toxic, it's gotta, they're looking for this. In my opinion, they're dismantling it piece by piece. looking to issue in their new system here, completely digital, completely fiat. The system here, unfortunately, they're going to force people to use it, and they're going to have no choice, unfortunately. But I'll tell you something. If nothing else, it's interesting to watch. Now, with regard to what you were talking about, home prices, I just covered this today in my post-market video, and I've done this before. It's gotten so distorted, and my definition of a bubble is very simple. It's when any asset becomes an average price, let's say, of a house is so far out of the reach of a person making an average salary right now. That's the definition of a bubble. So, when the average guy, the average girl can't afford an average priced home, that's a bubble. So we clearly have a massive bubble here in real estate, and it's been deliberately inflated here. And look, there's no way on this earth, off this earth, or anywhere else that central banks didn't know that by artificially suppressing rates for all these years, it wasn't going to create malinvestment, wasn't going to create distortions, and everything else that we're seeing now. Of course, they knew it. We know it. They know it too. So, it's just the inevitable normalizing, if you want to call it, of the entire system. And then that's all what a crash is. And that, why the markets are a part of a market or a housing crater? Why? Because they're trying to establish fair value. They're trying to fall back on what they're designed to do. Right now, everything is just so distorted that nothing makes sense, but it's going to, and it's going. In my opinion, it's going to overcorrect in a massive way. So, we don't even know what the bottom is.
The problem if it overcorrects for too long, Greg, you have the U.S. federal government tax revenues at the federal level and state and local level, and you brought up home prices at the state and local level. A lot of these state and local governments are still increasing property taxes. So as home prices were rising, the Fed was inflating, the U.S. federal government was subsidizing 30-year mortgage here in the U.S. A lot of cities and states.
You're nailing it to the wall. But the Federal Reserve has inserted itself in every single transaction, whether it's involving real estate or whether it's going to the store and buying something, by sucking the purchasing power out of the currency. Usually a market or a transaction has a buyer and a seller. Yeah, well, there's a buyer and a seller, but now we have this third entity in here with central banks, in this case, the Federal Reserve, who has injected itself into every single transaction that even individuals make on their own, but again, by devaluing the currency. And this is something that's been going on, as you know, for a very long time. And in my opinion, it's going to accelerate. They have no intention at all to stop inflating, because that's where a central bank's power resides. It's an ability to inflate. And that's why we're in the situation that we are today, including this debt ceiling and funneling money for wars and every freaking thing else here. And that's why we're in this dire shape. We're in a terrible position right now. And unfortunately, it's only going to get worse from here. In my opinion, there's no relief in sight.
Well, do you think that the Fed is the buyer of last resort for U.S. Treasuries? Because D.C., neither political party is actually talking about major spending cuts. They're really just fighting over the rate of increase in spending. Mm-hmm. And so it seems to me, you look at the foreign governments, whether that's Japan, China, Germany, the countries that normally run large trade surpluses and buy a lot of U.S. Treasuries, recycle the reserves back into U.S. Treasuries, they're not doing that. In fact, you're seeing more headlines, Greg, that the non-G7 central banks, so Singapore, Poland, a lot of other emerging market countries, they're buying gold tonnage. They're not buying U.S. Treasuries. So do you think then the Fed's going to have to be the buyer of last resort?
Oh, absolutely. 100%. I've been telling people that for years and years and years. And that's exactly what they want. They want that position, in my opinion, and they're working towards that. They have been for a very, very long time. They're buying it all, and they've been buying it all for years, and they're going to continue to buy more. And until all this is doing is increasing the stranglehold that this twisted institution has on all of us. We gotta look. I've been telling people for a long time now. We need a revolution. We need a revolt here. We're being ruled by an institution that has zero oversight. We have no say so. They can do whatever they want, whenever they want it. How does that work? How can we have a free society if we have this entity literally on us all that is unrelenting, that will not get out of the way? All they want is more control. That's all this is. It's a mechanism, or it's a way to assert more control on everybody and everything. And unfortunately, who's paying the price for that? We are. I mean, we're watching an entire class of people become extinct. Something that you and I think, have been talking about for years. The middle class is going away. They're going away. We are moving towards a new feudal system, and it's so in our face right now. This is where we're going. What are they doing too? They're creating dependency on the system. They're trying to get as many people they can dependent on their system. So when they issue in the new one, people are they're going to have no choice. Oh, please help us, save us. But that's where it's going. This can't be fixed. There's no fix here. It can only come apart and then be rebuilt. And they're taking it apart right now, in my opinion, piece by piece. They've been doing it for a long time, but it's accelerating.
Yeah, I agree. I think we're towards the end of the road to serfdom, as F.A. Hayek wrote about, and it's because of stagflation. Even at 3%, the average person doesn't understand this, Greg. So even post 2008, if the Federal Reserve Bank was running a real inflation rate 3-4%, here we are 15 years later, people's purchasing power is almost cut in half. Even at an inflation rate, people's like, oh, 3% inflation is not that big. Well, over 15, 20 years, I mean, it adds up very, very quickly over a long period of time.
It's incredible. There's another great point. You're absolutely right. We have 2%. That's our goal, is 2%. That's the Fed. Add that up. 2%, 2%. I mean, it's an incredible thing. It's kind of like compound interest.
We both know it wasn't 2%. It was at least between.
Oh, of course.
Yeah, it was like 3 to 8% for many.
That's their own word. That's what they're trying to sell us all. But I think everyone that follows our work knows what kind of line of nonsense that is. It's not real. It's never been real, but people buy it. They hear this stuff. It gets forced on them via the mainstream propaganda, and they okay, that sounds nice. Just 2%. Oh, okay. Oh, I can live with that. Let me add up my pennies and my nickels and my dimes. Oh, it's okay. I mean, come on, man. I'm telling you, we need a revolution, but people aren't going to do it. They've been so lulled into a sense of, I guess, either learned helplessness or they just don't give a damn.
Well, they're gambling, they're hustling, they're gambling, they're looking for a side hustle. They're the levels of ethics and morals in society, because of people's bills going up and all the cost of everything. They're becoming morally bankrupt, and we're turning into a nation of speculators and gamblers. I mean, people are chasing just insanely high valuations on Apple stock and Nvidia. They're chasing whatever they can to try to make quick profits to try to offset stagflate, tax lie.
Absolutely. That's what they're doing. And it's always the same story. And it always ends the same way. We just don't know when. I mean, you're going to have a lot of people are going to say, hey, when? Who knows when? I don't think about it. I'm sure you don't either, because there's no way to pinpoint it. All we could do is outline what's happening, where, and the most likely where its place is going to go, because we've seen this before. It's not like, this is all uncharted. Well, a lot of this is uncharted territory, but we've never seen anything like this before. But there's a lot of similarities to all of these kind of events, how they eventually all end up. And that's where we're going. I mean, it's so clear. And people, I think, like I said, we've done a good job keeping people ahead of the curve. People who follow our work, I think, are the most prepared of anybody else. They know what's going on, and they know what to do about it. In my view, at least from a financial standpoint. But I go beyond that. I tell people, love each other, care about each other, be charitable, find groups of people, like-minded, people you can count on in a worst case scenario. Because I sincerely believe in my heart of hearts that we are marching into a worst possible case scenario.
So, Greg, I want to draw on your experience as a floor trader working on Wall Street. What happens if the government actually starts with short selling bans? So similar to 2008, or maybe even worse, because we've had Jamie Dimon just come out and say they should ban short selling on banks. Well, what has happened in the past when you were trading on the floor and the government has talked about banning short selling?
Well, first of all, I don't think that's going to happen. I really don't think that's going to happen. First of all, for a market to function, you need these elements to it. Okay, people don't even understand that. But again, although it's complex, but in order for the system to function, unfortunately or fortunately, however you want to look at it, short selling is an integral part of how the system works. They don't like it. They got to take the whole system down and redo it. There's been a lot of talk for years and years about banning short selling. In And it's just not going to happen here because, again, what are they going to do? What are the big institutions going to do? The big institutions, when this comes down, and it's going to, are going to be betting against their own clients as they always do. And that's probably a mechanism through some dark pool, however they're going to work it. And again, it's just the same situation here. More cash is made when a market drops, and the people like Jamie Dimon is well aware of this. When a market drops, than when it rises, and it's made faster. And I think these major institutions, when you hear something like that come out of the mouth of a Wall Street bank, super bank CEO, you got to believe the polar opposite is true. And he's laughing. He's laughing because he knows that him and his institution and whoever else is going to be, they're going to be reaping big fat rewards off of all that. And then, what's going to happen? Nothing. Nothing's because they can't. It's a hard thing to prove. And another thing they're going to do is they're going to work it in a way that there's no way to actually find out. And nor would regulators even look at it anyway. They only look at people like you and I. You and I are the only ones that get in trouble. These big institutions, they get a fine, they get a slap on the hand. They never even have to admit guilt. How's that? Imagine that. Imagine a situation where you do something wrong, you don't even admit you did it wrong. You just pay a little fine, an insignificant cost of business fine, which they know it's baked in anyway, and they just walk away scot-free. I mean, really, when was the last time you, I, or anybody else heard of a large institution or a big wig at any of these institutions getting in any kind of trouble? It's always the small guy.
I think it was Enron.
Enron, in the back room. But generally, I mean, Enron was an outlier. I mean, that was just incredible. What a story. You know what I tell people? America has become Enron. And the world has become Enron via this situation that they've created here. So people should watch what's the name of that movie? Oh my God, The Smartest Guys in the Room. Go out and rent it, or however you watch a movie, and watch The Smartest Guys in the Room. And
the documentary.
It's a documentary. It will change your life. You ever see it?
No, I've seen the author who wrote the book, though. I think Bethany McLean wrote the book.
Yeah, she's fantastic because she's actually I know her personally.
Oh, cool. Yeah, she was just on Wealthy on a couple days ago.
Yeah. And it's just that is a mind-blowing documentary, and she nailed it to the wall. I mean, you want to talk about nailing it to the wall? People need to watch that and see how that whole thing went down, and how the little guy got decimated on an unbelievable scale, while the big wigs walked out of there. A couple of them walked out of there with hundreds of millions of dollars. Sure, some of them went to jail, and one of them supposedly died. George Bush's great friend here. What was the name? The CEO guy, whatever.
Kenneth Lay or Skilling. I think those were the two.
Kenneth Lay, Kenny Boy. That was George Bush's nickname for him, Kenny Boy. He just happened to just die. I don't believe that he ever died. I have to see the body and take a DNA sample. But the other guy did go to jail for a little bit. He's out now.
And he'll probably get hired by another large company because he knows how to cook the books. Financial engineering now, hardly anyone goes to prison for it. I mean, the last time I think large bankers went to prison was the 1980s savings and loan scandal. Corzine was John Corzine, MF Global, enormous corrupt stuff he did. No prison time.
Hey, just talking about NVIDIA, they're up 25% after hours right now. Wow.
That the valuations on that stock are insane considering, but I guess maybe people are worried about like China invading Taiwan, and then there's a lack of semiconductor supply. I think there's part of that priced in, but I mean, if that geopolitical risk wears off, that stock could crash. But the valuations on these things, like a handful of big cap tech companies, the rest of the stocks, Greg, in the Russell 2000, so the small cap index, the rest of the stocks are doing very, very badly. So it's really what Microsoft, Apple, NVIDIA, and a few other companies, and that's about it.
Yeah, it's been like that for a while. A couple of the big companies, the large caps, that they carry the market. That's another phenomenon that we've seen too. At the top of I'm not saying we're at the top here, but because I like I said, I've been net long the market. I'm still net long. I play around with it here and there, trying to short it here and there once in a while. Like ticker SPY. One of my trades went bad recently, but that's okay. I can't win them all. But best life in the big city. Anyway, all interesting stuff, I have to say.
So I want to get your thoughts on the oil market right now. I've been speaking with oil traders, hedge fund managers that specialize in commodities, and they were telling me just almost every day, Monday through Friday for months now, that many billions of dollars of oil futures contracts are just being created and dumped onto the market, and it's paper oil. Meanwhile, the producers of the oil, so OPEC, the Saudis, are talking about this, and it looks like there's going to be supply constraints long term. Do you think this is another train wreck a couple of years from now with another energy crisis?
Oh, beyond any doubt, 100% we're going to have that again. I think you've been hearing what the Saudis are saying about this. They're like, they're not going to allow, and they won't. This organization here, another one that should be gone in my view, OPEC. They're going to play this to their favor as they always do. It's an incredible thing here. But not only are we moving towards an energy crisis, and we're moving to look, we live, unfortunately, in a crisis, in an environment that only exists moving from crisis to crisis to crisis. Each crisis requires more and more cash to be thrown at it. It's a deliberate thing. There's no such thing of things running smoothly anymore. It's just always crisis. Okay, then we move on to the next crisis, and the next one is worse. And all the mechanism to borrow, all the mechanism to keep pulling cash into the now, to keep the debt-based economic model going. But there's no doubt about it. I've been telling people, I've been saying that the right spot that people need to think about, and this is just my opinion, but I think people need to look into this, is commodities in aggregate. I think commodities in aggregate are going to skyrocket at one point here. Look, cash is just going to eventually, we're going to get a meltdown here in the debt market that's going to spin people's heads around like The Exorcist. And that's going to crush equity markets around the world. And cash is just going to move. It's just going to move from one place to another. And and that place is going to be commodities, in my view. I've been saying this for like 10 years. And, eventually that's how it's going to play out. Risk on will become risk off. And then we're going to get an overshooting, overcorrection, or whatever you want to talk about it, and to everything. And then it's going to roll the other way, as it always does.
Well, I think what the Fed did with the interest rate hike, so the Fed claimed that they're fighting inflation, but they created so much currency, them and other central banks. So the money supply numbers, if you look since 2008, the Austrian true money supply numbers are up over 160% in the money supply. And then again, Greg, from 2020 to 2022, they increased it by another about 50%, the Austrian true money supply. So these are not M1, M2. The Austrian School of Economics and Mises Institute calculates it differently. Murray Rothbard wrote about it. Another Austrian economist wrote about it. So you had just an insane increase in the money supply. The analogy I would use is they took the car up to over 120 miles per hour, and then they just slammed on the brakes. So if you're driving super fast and all of a sudden you slam on the brakes, I mean, it's not very smart what's going to happen, the after effects.
No, because again, this is part of what they're doing here, in my view, to dismantle the system. They had to do these things in order for it to work out, and everything is working out exactly like they wanted to. They're in full control. People think, oh, they've lost control. No, this is exactly what they want. They're creating all of this. They've created this environment of extremes, and this environment of extremes, I don't even think they're done. I think it's going to get more extreme.
Well, look at the warnings that Janet Yellen. I mean, she's not talking about necessarily bank bailouts. She's talking about shotgun weddings, forced bank mergers, but that's making basically too big to fail banks larger, or eliminating the consumer's choice of banks, because there's going to be a lot less banks in the next couple of years.
100%. That's what this is all about. I told people this from day one. This is a consolidation of the banking system. It's making the too big to fail much bigger. It's all they have to do this. They have to consolidate the banking system, less institutions, less players here for the new system. And the new system is coming. It's just a matter of time before it's rolled out. But in order to do that, they have to set it up the right way. And that's part of it here. They have to play it onto people. It's a game. Oh, we have to do this, and then we're going to have a fire sale on the assets of this company, and these are going to get bought for pennies on the dollar. And we haven't seen anything yet. I think, they're trying to distract us. They don't want us to know what's going on here, but nothing has been solved with regard to the smaller institutions at all.
Yeah, I totally agree.
Yeah, there's going to be a lot more of this moving forward. And,
we've been talking about this before we started recording a couple of days ago. I mean, I had a conversation with a banker at a large bank a week or so ago, and he showed me some models. I can't publish them publicly. He told me not to, because then people would figure out kind of which bank he works for. And the stuff he sent me, it was just shocking that basically none of the banks had in their contingency plans that the Fed would raise interest rates this high. So basically the banks they have enormous losses on their old bond portfolio. They have enormous losses on mortgages they gave out at lower interest rates that are locked in at lower interest rates. They have enormous losses on commercial real estate and in their depositors. So if they're a smaller bank, their depositors are leaving for greed or for fear to either a large bank, a money market fund, or they're buying treasuries from Treasury Direct, which are quote unquote safer and a higher interest rate. So basically the Fed, with the rapid pace of the interest rate hikes, they basically made the banking system insolvent now.
Well, yes, and it's been insolvent. Like I was saying earlier, it has to operate that way in a perpetual deficit. It can never be solvent. It can't be whole ever. That's how it works, and it can't work another way, unfortunately.
Are you talking about fractional reserve banking or something else?
Well, we have zero. We have no reserve now. There's not even a fractional reserve system. It's zero reserve now. But but the whole system has to operate in a deficit. It's the debt-based economic model. It must constantly. It's a vacuum under it all the time, and that vacuum has to always be maintained in order to function. I mean, what do I tell people this? I was like, you want to end the system? You know how we could take down central banks? You know, you want to take down the Fed, prevent them from issuing one single dollar, just one, of debt. If we were able to prevent the Federal Reserve from issuing one single dollar of debt, the institution dies. It's that simple. And that's why you have the constant unrelenting spending, finding reasons to fund wars and finding reasons to fund, vaccines and whatever it might be. It has to constantly go work like that. It can't work another way. If we really were to cut spending and we're able to, like I said, prevent the Fed from issuing $1, we could start a global domino effect, which would wipe out the central banks around the world. They have to function in a deficit all the time. Central banks issue one product. As you well know, their product is debt. The more debt they issue, the stronger they become, period.
Since 2008 also, Greg, especially the Federal Reserve Bank, I mean, they create currency out of thin air, and then they go and pick out winners and losers, who they're going to give bailouts to, what asset prices they're going to subsidize or inflate or move up, because then all these levels of government need the tax revenues too. So they're creating. You said the system is a vacuum. I mean, I would argue the system actually resembles more of a Ponzi scheme, because the debt can.
Well, Ponzi scheme Ponzi scheme is like a vacuum too. It has to constantly be fed. If you don't feed it, it goes down the rat hole into nothingness, and that's what we have. It's a Ponzi. It's a humongous, epic Ponzi. I'm glad you used that word, because I've explained it in the same ways too. It's a Ponzi, and they have to keep finding reasons to borrow more, create more cash out of nothing. It's exactly like a Ponzi. I
get in trouble with my mainstream finance friends and my mainstream hedge fund manager friends, a lot of them, for saying it publicly. But the system with the currency growth, the debt-based fiat currency growth, and the credit growth, how it's resembled for decades now. I mean, it closely resembles a Ponzi scheme, because the debt can never be mathematically paid off. And yet it keeps growing and growing and growing. It's restructured, it's reissued, it grows. And in the interest payments on the debt, now we're finally getting to the real math problem here, because the U.S. federal government, Greg, 3 or 4 expenses now for the federal government are taking up most of the tax revenues, including interest payments on debt, military spending, entitlements. And that's, I think, over 50% of the tax revenues. And no one in D.C. wants to talk about this publicly, really.
No, and it's a problem that's been brewing for a very, very long time. And it's again, we're reaching a moment, what I call a moment of maximum saturation. And the opening act of this moment of maximum saturation is surging inflation, like we're seeing right now. And then again, central banks are going to get in here and have to buy more and buy more and buy more. And by doing that, and at the same time raising rates, inflation is going to still move higher. I mean, it's a self-fulfilling feeding mechanism here. And it just can't stop. And again, part of it, and this is by design, obviously, they knew this would happen. So it continues this way. And that's why they realize, in my view, that this system cannot sustain itself. So what's going to end up happening, unfortunately, is we are going to witness, and I think it's going to be pushed on all of us, another major crisis. Because again, we function from crisis to crisis to crisis. There's going to be another crisis here, and this one is going to, in my view, is going to be an implosion in the debt market, and we're going to see rates spike in an uncontrolled fashion. That's going to spin people's heads around. It's going to be like, and then there's the potential, and I think is very real, for a whole system to lock up, a credit freeze. Like that was you see, what people don't get, and is in '08, the problem wasn't the markets crashing. That was just the side effect of what was going on here. The capital injections into the system, as you know, were just to unlock it. There was no interbank lending, no inter-system lending. It was just stopped. And if that happens, and I think it will, again, ATMs don't work, credit cards don't work, debit cards don't work, no cash out of the banks, transactions stop. And that's really what they're trying to push off here, and why they're so desperate now to keep inflating, at least for now. I've been saying they're not done. They're not done. At the end of last year, they're not done. I think we're getting close, though. I'm telling you, I was talking to Joe Salente about this just the other day, about how this is playing out. And you, me, and him are honestly all on the same page. We're seeing exactly the same thing, and that says something to me.
So do you think then other governments and other central banks that are running trade surpluses or have cash, have US dollars, have US treasuries, they're seeing what happened to Russia back in February 2022 with the sanctions, and 300 billion of Russia's reserves were just confiscated? That's basically a bail-in at the macro level. The US federal government changed policies and penalized Russia. That's 300 billion that's not coming back to them. Is that why these other governments and central banks are saying, hey, we're not going to buy as many US treasuries. We don't like the policies, but we also see how Russia was treated, so we're going to diversify away from US treasuries and the US dollar into other stuff?
Unfortunately, we're seeing the fall of an empire, and the world is aware of that. You're aware of it. I'm aware of it. The people that follow our work are aware of this. The landscape of the world is changing very rapidly. And I do believe it's going to end in a literal catastrophe, meaning war, a global war. I think is definitely in the cards. This is it's like a rabid animal being pushed into a corner, and we do have a pretty strong military, and that military will be pointed in any direction, inward or outward, that they want. But this is definitely, the United States is failing. It's being designed to fail. I really, and central banks are solidifying their power, especially the European Central Bank, the Bank of England, the Federal Reserve. They're working together in concert to do this. And then there's the BRIC nations and stuff that are saying, hey, hold on a minute. We know what's going on. We see what's happening. So, and we don't want to be part of that. So what we're doing here is we're going to do our own thing. So this is just setting up opposite sides here. So you can see and to me, the writing is on the wall. It's on the wall. It's just a matter of time and just watching it all unfold.
So I'm hearing a lot of brainwashed people talk about how this is the perfect example. Marx was right of late stage capitalism. I totally disagree. I don't think we have really any capitalism unless you're a small business owner and you're getting penalized.
You're 100% right.
Yeah,
no capitalism.
Yeah, the Federal Reserve Bank is not a capitalist entity. It's a government protected cartel. If you look at the legal cases if you look at the legal cases where the Fed is sued, the lawyers just make the most ridiculous arguments. Sometimes they say that they're a government entity, and sometimes they say that they're private. So they argue whichever they want. They get away with whatever they want. No other entity has that type of power here in the United States that the Federal Reserve Bank does. I think, Greg, and I know you've read a lot of history, this looks like the end of an empire. So the U.S. is just so wasteful at this point. We're paying almost $1 trillion per year now just on debt, just on interest payments on the national debt. The national debt's growing rapidly. People in DC don't seem to care because they're like Nancy Pelosi. They're trying to either get rich quick, like AOC, who I think is worth over $5 million in under 5 years in Congress, or they're trying to get richer like Nancy Pelosi, who's arguably been the top performing hedge fund manager trading on inside information the last 10 or 15 years. Exactly.
I tell people, you see that exact case, 100%. It's the truth, bro. It's corruption. The fall of empires is always the same. It always ends for the same reason, and generally it's corruption here.
Yeah, I mean the level of morality, everyone's so short-sighted. You have so many people doing gambling or loose morals and all this crazy behavior by grown-ass adults acting like immature little babies or teenagers now is just nuts. And then everyone is trying to get rich quick with some type of scheme or there's tons of people, Greg, and they've been reaching out to me like asking me, and they don't have any stock market trading experience. They don't know how to read any fundamentals, and they're asking how to trade stock options, trying to get rich quick and stuff like that. It's just tons of red flags right now. We saw this though when back in early 2022, when the crypto market and the altcoins and the NFTs just peaked, tons and tons of people. I was getting messages from all these different people about like trying to set up all these crypto scams, or is crypto going to come back? Am I going to be a millionaire in a couple of years? It was just ridiculous questions.
Exactly. Look, the other thing is people are trying to survive. So they're looking for like people are getting crushed, and they're getting crushed by design. So they're looking for what can I do? Can I jump into the stock market? Can I buy this? Can I do that? How can I make ends meet? Credit card debt, household debt, personal debt soaring out of control. It's absolutely freaking crazy, bro. It's completely out of control.
Well, you've said the Fed will raise interest rates more. I think they're hitting a limit here. So maybe in the private sector, they raise
I think
rates.
they're going to pause next month. I would be shocked if they don't pause for a little bit. I thought they would like last year at the end of last year. I thought we would get a pause early this year. We're kind of in the middle of the year now, but we're going to get a pause for sure with the Fed. I can't imagine that I'm wrong. In all the years I've been at this, I've only been wrong 3 times with regard to what the Fed would do. So if I'm wrong on this, I would be kind of shocked. So, but like I said,
I think the damage is already done to the private sector, Greg. So you were talking about small business, the interest rates. You look at the interest rates of small businesses, the small cap indexes on the stock market. So these are the smaller companies. Their cost of capital is higher than, say, a JP Morgan or a large corporation. So they're in dire straits right now with their balance sheet and interest payments on debt. They're trying to cut back on their spending because of interest payments, or credit card, or their consumers just not spending. Their consumer doesn't have the discretionary income. So I think the damage is already done from the rate hikes. I mean, the banking system at this point is a mess right now. And it seems like the Fed is just ho-hum. We're going to force more mergers. We're going to do secret bailouts. And then they're going to consolidate everything for central bank digital currencies and less freedom.
Beyond any doubt. That's exactly how it's going to go. That's what they're trying to do. I mean, and people, the worst part of it is most people are okay with it. They don't care. They're willing to surrender whatever they got to do just to, I don't know. It's a very interesting thing to see, honestly. It's pretty damn freaky.
You saying that people are apathetic. So a lot of people are already paying their smartphones with a Cash App or a Venmo, or they use Zelle, one of their banking apps. So they're like, oh, it's a government cryptocurrency. It's no big deal.
Oh, absolutely. Yeah, I think that's a big part of it. People, they just, people aren't taught any of this stuff. They just, all they want to know is, okay, I get up, I go to work, I earn money. Well, actually, when you get up and you go to work, all you're doing, what people don't understand, in my view, is they're working to earn the right to borrow that cash from the Federal Reserve that they don't even own. It's an incredible thing. It's so sick to me to think about it. Like, the cash that we work for, okay, we don't own it. You know that. It's owned by the issuing central bank, plus it's issued back to the central bank plus interest, okay?
Well, so it's being debased.
Yeah, rapidly. To earn that too, of course, at a very quick, rapid pace. It's getting out of control. Pretty much sums it up, bro, unfortunately. And like I said, people, the apathetic was the good word. They just, either they don't care, they don't want to care, and they're going to care, I think. Then they're going to sit around and do this. What happened? Why did this happen? I don't understand. Why? Well, people like you and me and a lot of other people have been talking about this for a long, long time. And then when it gets real ugly, well, then that's it.
Unfortunately, I think people will fall back on their ideology or the degrees or whatever types of bias they get from watching the media, because a lot of people are blaming capitalism for all this, unfortunately.
Unfortunately, moving away from that, it seems like more people want to be taken care of from cradle to grave, and they're more than willing to vote for anyone like it matters anyway. I don't think our votes count at all. I think the central banks are the government, but they're willing to do whatever they got to do so that someone will take care of them, so they can get things for free. Whatever it is, it's crazy. The human race, or at least here in the United States, I mean, people are more like animals, like they live in the now. They don't think about why things are or how things may affect them down the line. It's like, okay, I want this instant gratification. I want to be satisfied now. I don't care what the cost is. It's just so crazy.
Well, the average person also doesn't know how big of a hypocrites these entities are. So these large corporations don't believe in capitalism, don't believe in free markets. Excuse me, the privates are privatized and the losses are socialized. So heads we win, tails you lose. And so like the CEO, Jamie Dimon of JP Morgan, the insiders at JP Morgan are selling a lot of their bank stock. I think over 22 million of their shares were just sold because they know that there's a lot of problems coming. Meanwhile, when these entities, these banks like JP Morgan or others get caught manipulating a market since 2008, they paid tens of millions of dollars in many different fines for market manipulation, whether it's LIBOR, which was global interest rates, or foreign currency exchange. They're manipulating gold and silver markets. They pay a fine. This is enormous hypocritical, but they're talking about banning short selling on bank stocks. I mean, if there's no short sellers, who's going to cover to buy? You need buyers and sellers in each market transaction, or the crash could actually be worse if you ban short selling.
It's not going to make any difference here. This whole thing is going to get real. Whether they ban it or don't ban it or whatever it might be, there's no way to stop the market from attaining some kind of reality at one point. And then it's not even that, it's going to be by accident. This, in my view, is going to be, again, more money is made when the market drops than when it rises, faster. They're not going to stop. This is what they do. It's a repetitive cycle, goes on, and it'll happen again too. Even when this thing gets real, it's going to get unreal again and then get real after that. This is not going to be the end all. It's going to always be the same because it always is since its inception.
Well, also, I think the average person doesn't understand nominal returns versus real returns. So some of the top performing stock markets were in Zimbabwe or Venezuela, but that's because the currency was collapsing. So there was nominal returns in the stock market. People saw, the stock market in Zimbabwe or Venezuela or Argentina is going up a lot. But what they weren't also paying attention to is making inflation adjustments to the currency, because the currency is being debased faster at a faster rate than the stock market is going up. So just talk to the people who've survived those countries and escaped about the stock market going up, because for a while they were gambling on the stock market going up, but it wasn't maintaining their standard of living. Their standard of living was still collapsing because of currency debasement and the corruption in the government was ruining the economy.
Well, yeah, I mean, look, people are going to have their delusions of whatever they want, but people are going to get a wake up call here, bro. And you and me, we can say, you know what, everyone, at least we told you about it.
Do you think crypto is going to be allowed, or do you think the private crypto like Bitcoin, or do you think there's going to be some type of tax or ban on it in the not too distant future?
It's a totally different thing. And then people have actually, look, people who have cryptocurrency now, me being one of them, I don't use this stuff. Would I? No, let me correct that. I have bought things with Bitcoin in the past. In fact, I bought gold with Bitcoin. I bought a bunch of it gold with Bitcoin about a year ago. No, a little older than that, but a year and a half ago. But most people don't transact in this stuff. They hold it. Now, what the central banks are going to do, the Fed with their digital currency, is going to be used as a mode of transaction, completely different than, same name, I guess, maybe. I don't know what they're going to call it. Than what people currently are holding, Bitcoin, Litecoin, whatever it might be. So it's a totally different animal in my view. It won't change my perspective. I think when the eventual meltdown happens, cash is going to move into commodities, like I said, and I also think it's going to go into the big cryptos more than likely. Cash doesn't fly away to money heaven, as you well know. It just moves from one reality into another, and that's where it's going to go here too. It's going to end up in commodities. It's going to end up some of it into cryptocurrencies. Mostly commodities are going to be the biggest beneficiary, I think, of the debt market implosion, which is going to happen, and then the following stock market fallout around the world on the back of spiking rates and maybe a locking up of the system. We'll see how it goes. I just want people to be ready for it.
Do you think buying assets that the Fed and other central banks can't print, because you think then long-term the goal for these governments and central banks, whether it's the Fed, the European Central Bank, Bank of Japan, is to devalue these fiat currencies? So if you buy and hold, if you're in cash for many years, so dollars, euros, Japanese yen, Chinese yuan, you're going to be intentionally devalued then?
Well, that's what they've been doing forever. They're not going to stop. I mean, they're in a race to the bottom. I've been telling people this for how many 10 years, that central banks are purposely sucking the purchasing power out of their currencies, and they're doing this by design. Yeah, and that's what I mean. People think it's funny. People think that this issue with inflation is just an issue here in the United States. People don't realize this is pretty much a worldwide phenomenon.
It's
It's
actually
interesting.
worse. It's been worse in other countries. I mean, because when the dollar is strong, the other currencies are normally weaker against the dollar. And the inflation that we've gotten here in the United States since 2008, a lot of it has actually just been imported. So it's been lower levels of stagflation for a while, up until the last couple of years. That was what the high levels, the teen levels. So 13, 14, 15, 16, 17%, according to shadow stats. Those were high levels of stagflation, but there were low levels of stagflation, a lot of it for many, many years prior to 2020 and 2021.
I've been telling people that the number one export product of the United States is inflation. I believe that's true. I really do. Maybe I'm crazy, but I don't know. I think it's true.
I think you're right. I think the U.S. has exported many, many trillions of dollars over the years.
And they continue to do it, bro. It's crazy situation, man. I just I don't know. What are people going to do about it is the bottom line. I still feel the most undervalued asset is silver, physical silver. I think people need to own it. I look at the Dow gold ratio, gold silver ratio, in case people are wondering who are listening to this for the first time, who maybe don't know who I am or what I do. But it's very simple for me to say what I do, and that is, at least from a financial standpoint, you gotta hold units of wealth, because the system it's just so sick and twisted at this point. It just can't go on forever. It's not designed to, and they're getting ready to make their move to the new system, and it's not going to be pretty.
And if my listeners want to follow your work, how do they do so?
Oh, just go to my website, traderschoice.net, or my YouTube blog. Just Google me. I'm pretty much everywhere.